Time for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Seiwan, Professor of Economics at Ewha Womans University. Dr. Kim, thank you for making time today.
Good afternoon, Devin.
So far, Korea's exports are up this month, the first time in a year. Car parts are looking good, but semiconductors were down again compared to a year ago. What do you make of that, and what's your outlook as we come to the end of the year?
If we take a look at data from the beginning of this month to the 11th of December, it is true that early progress of Korean export looks great, with over 7% increase compared to that of last year's. As you said, the automobile and communication devices export gained in December in a large scale, over 10%. But still, chip and display devices export decreased over 20%. Since there has been 12 straight month export decrease until November in Korea, there is much attention towards the end of export decrease in December.
Right. Well, talking about growth forecasts, the Korean government's looking to have the economy grow next year by 2.3%. That's higher than the IMF's projection of 2.2%. Do you think 2.3 is doable?
If I put it straight, I believe that next year's economy will be more difficult than this year's. So that means 2.3% economic growth in 2020 won't be easy at all. Domestically, investment and employment are very weak, and major economies like China, EU, and Japan are under serious recession. So, except the United States. So, global recession will limit the export increase of next year.
Very interesting. Well, speaking of the U.S., we have the Fed's last meeting of the year, which wrapped up on Wednesday. The Fed decided to keep interest rates where they are, and the committee members seem to indicate that rates won't change next year. Tell us about that meeting.
As expectation of the market, U.S. Fed has decided to hold a key interest rate at 1.5% to 1.75% level. Fundamental reasons are a robust U.S. economy with economic growth over 2% and very stable inflation under 2% level. And at the same time, after meeting of FOMC, Fed gave signal of long pause of interest until the end of the first half of the next year, like until June of the 2020.
Yeah, well, we've also seen caution this week, not so much because of the Fed meeting, but because of the December 15th deadline for a U.S.-China trade deal. After that, new tariffs are set to take effect on China. There are a few ways this could go, including a tariff delay. What would the market response be to these different outcomes?
As of now, it is highly expected that Trump administration will delay 15% tariffs on Chinese $160 billion of export, which is supposed to be imposed on 15th of December. Mr. Trump wants to finalize the phase one deal with China sooner or later, so he doesn't have a pressing incentive to impose tariffs right now by taking a risk of screw up the negotiation. So I believe that the tariffs by U.S. government will be delayed.
I imagine there would be a positive response in the markets to that, if so. But the Korean market is up for the week. What effect is the U.S.-China trade deal having locally?
As U.S.-China deal negotiation gets longer and more complicated, Korean equity market goes down because Korean economy is highly dependent on these two countries, U.S. and China. But as expectation of phase one deal becomes higher, it does give positive impact on Korean market, and that positive impact will be continued until the completion of the phase one deal.
Got it. All right, Dr. Kim, we appreciate your insights as always. Thanks so much for coming on.
Thank you very much.